So we had the Greek crisis, we've kind of solved that, and now it's a new frontier that may also be more difficult for the markets to price in.
It's a lot more difficult to see how the migration crisis could be solved to everyone's satisfaction. Migrants come and they hit the poorest countries first, the European South. There is generally an anti-migration feeling throughout Europe. The northern countries are saying, why me, or I've taken enough. You keep the migrants down, and the biggest problem of all is that although migration flows are down this year, they're going to get worse because of demographics. Africa is growing very fast, the Middle East is growing very fast, much faster than Europe. There will be demographic pressures coming to Europe, and there is no policy, I think, for the whole of the European Union, and I cannot see what policy would satisfy them all. So for the first time, I think, much more than during the debt crisis, we are threatened with closed borders. Some countries might say, well, I had enough of these open borders, freedom of movement of migrants, of people living in the country, in other countries of the European Union. We'll put an end to it and continue only with free trade and single market, but not with movement of people. I can see that happening.
Burkhard, let me bring you over to a markets kind of actually chart that we did. Thank you to Hillary Clark, who's a genius, really, queen of charts, not for nothing. When you look back at history, there's no denying that the 10-year bond yield is low on an absolute basis. But over the past 12 months, that German yield has been higher for euro-based investors than the 10-year U.S. yield after hedging for currency risks. So does that mean that you're a buyer at this moment of Bunds or not?
No, it would be vastly premature to rush and buy Bunds at these silly levels. Let's not forget, the crisis this time is not a real but a political crisis. Immigration, as we all know, is actually down more than 90% on a two-year comparison. And all the negative side effects associated with migration, such as unemployment or crime, are actually down all over Europe. So this is a crisis which has been created by politicians seeking re-elections or their own national profit-taking from it. The positive way of looking at it, underneath this political storm, there is a European economy that is still humming along well, despite the threats about trade war, etc., that we can discuss. But corporates, companies, are not yet affected by this in any meaningful way. And that's different to the Greek crisis a couple of years ago.